Welcome back to Investology, and in today's video we're going to be breaking down one of the most important topics for small business owners, which is the top 5 tax write-offs you can use if you have an LLC. Now, there are many different reasons why someone might decide to form an LLC in the first place. Maybe you just started your first business and you want to do things the right way from the beginning. Maybe you recently started earning 1099 income, and someone told you that you need some type of business structure. Maybe you're a truck driver, a freelancer, a consultant, or even someone who wants to invest in rental properties and is thinking about using an LLC for asset protection. Whatever your situation is, today we're going to walk through 5 of the most powerful tax strategies that LLC owners can use to legally reduce their taxes and put themselves in a stronger financial position. Let's start with number 1, startup and organizational costs. As a new business owner, there is a very high chance that you already spent money before your business was even officially up and running. These expenses might include things like marketing, advertising, website creation, business coaching, training programs, legal fees, or even accounting services. Any costs that you incur before your business is considered fully operational are classified as startup or organizational costs. The good news is that the IRS allows you to deduct up to $5,000 of these expenses in your first year of business. Now, if your startup costs exceed $5,000, which happens very often, the remaining amount does not go to waste. Instead, those extra expenses are amortized over 180 months, which means you still get to deduct a portion of them every year over time. This is why it is extremely important to keep track of every single expense you had before launching your business, because many new business owners forget to include these costs and end up missing out on deductions they were fully entitled to. Number 2 is the home office deduction, which is one of the most powerful and commonly used write-offs for small business owners. Since the pandemic, more people than ever are running businesses directly from their homes, and the IRS actually allows you to deduct a portion of your home expenses if you have a space that is used exclusively for business. This could be a dedicated room or even a clearly defined area in your home that is strictly used for work. The way this deduction works is fairly simple. First, you calculate the square footage of your home office. Then you divide that number by the total square footage of your entire home. This gives you a percentage, and that percentage is applied to your household expenses such as rent or mortgage interest, electricity, water, internet, gas, and even certain repairs or maintenance. So if your home office takes up 10% of your home, you can generally deduct 10% of those eligible expenses. This allows business owners to turn everyday living costs into legitimate business deductions, which can add up to thousands of dollars per year. Number 3 is the vehicle deduction, which is extremely important for business owners who travel for work. If you drive to meet clients, make deliveries, attend meetings, or use your car for any business purpose, you may be eligible for a vehicle write-off. There are 2 main ways to do this. The first method is using the standard mileage rate. For example, in 2020, the IRS allowed business owners to deduct 58 cents per business mile driven. This means that if you drive 10,000 business miles in a year, that alone could result in a $5,800 deduction. Many drivers use apps like MileIQ or QuickBooks to automatically track their mileage, which makes this process much easier and more accurate. The second method is actual expense depreciation, which allows you to depreciate the cost of the vehicle over 5 years. So if you buy a $50,000 vehicle and use straight-line depreciation, you could potentially deduct $10,000 per year. There is also Section 179, which allows certain business vehicles that weigh over 6,000 pounds to be written off entirely in a single year, which can create a massive tax deduction if used correctly. Number 4 is marketing and advertising, which is one of the most straightforward deductions available to any business. If you are in business, you need customers, and to get customers, you need marketing. This includes things like social media ads, Google ads, website development, SEO services, branding, flyers, business cards, and promotional content. The key advantage here is that marketing and advertising are fully deductible in the same year you spend the money, meaning you do not have to depreciate them over time like equipment or vehicles. Every dollar you spend on legitimate business marketing can generally be written off immediately, which makes this one of the simplest and most effective ways to reduce your taxable income while still growing your business. And number 5 is one of the most powerful strategies of all, which is electing to have your LLC taxed as an S corporation. This strategy becomes especially useful once your business starts generating consistent income. Normally, LLC owners and sole proprietors pay self-employment tax, which is 15.3% on top of regular income tax. However, when you switch to an S corporation, you can pay yourself a reasonable salary and then take the remaining profits as distributions, which are not subject to self-employment tax. This can save business owners thousands or even tens of thousands of dollars per year. In addition, S corporations allow you to deduct payroll expenses and take advantage of additional tax planning strategies that are not available to regular LLCs. The key is that this strategy only makes sense once your income is high enough to justify the extra accounting and payroll costs, but when it does, it can be one of the biggest tax-saving moves you ever make. So those are the top 5 tax write-offs and strategies for LLC owners that can dramatically reduce your tax bill if used properly. Startup costs, home office deductions, vehicle deductions, marketing and advertising, and S corporation election are all tools that smart business owners use to keep more of their hard-earned money. If you have any questions about how these strategies apply to your specific situation, feel free to comment the word tax below, and I'll send you more details, or check out the link in the bio for additional resources. And if you enjoyed this video, make sure to hit the like button and subscribe to the channel so I can continue creating content that helps you grow your business and legally lower your taxes. I'll see you in the next video.